Welcome to this week's Austin Market Stats. It is the holiday season, and I am joined by my dear friend and business partner in crime, Mr. Mark Koreski. Welcome.
Thank you for having me. It is quite the holiday adventure that we're all having in Texas and this Arctic blast we got.
Absolutely. Well, it's a perfect time for us to have our title of this week, which is Frigid versus Rigid. And we are going to debunk a few things that are going on. Last week, we talked about Elon Musk. We talked about JP Morgan and their $1 billion that they are investing in what's going on in Atlanta. We talked about landlords and cash flow. And then we talked about the market. So this week, we are going to talk frigid versus rigid on all sorts of things. And I would love to start with, wait for it, drum roll, the Fed.
Ooh, okay.
All right. So, softening on inflation. What are your thoughts on the fact that we've seen the CPI increase? We've seen the labor market doing some things that I think were unexpected. And what do you think the Fed's take right now is moving forward, because they've already promised us rate hikes? Are they going to be rigid about it, or are they going to be maybe a little frigid and step off it?
Oh, that is a really good one. I didn't know exactly where you were going with it, but that is a really tough one. In a way, as a mortgage banker, with really what's going on and driving mortgage rates, which is inflation, I really hope they're rigid on it. But really, what they're looking at doing is to continue to soften the labor market. And based on some of the reports that I've seen, it's they want, well, around 1.6 million Americans to lose their jobs. They've been, in a way, they've really stopped the free flow of cheap money. And so we're seeing that and the ripple effects that it's causing. And so when it comes to mortgage rates, we've actually seen mortgage rates continue to come down from their highest levels back in, I think it was August through October was where it really got above 7% and really stayed there. And so we're enjoying the ride. It's a ride to come still, but we're hoping to see mortgage rates continue to come down as we get more and more of these inflation numbers.
That's a great answer. So Austin being a microcosm and being affected by, our global economy, one of the things that we're looking at is how are job markets affecting Austin for both buyers and sellers. And number two is, from our workforce perspective, is the work from home. So with that said, I'm going to break that down further and you can tell me rigid versus frigid. Work from home having impact in Austin, Texas, I think is going to have a bit of a frigid ride for a number of people as they go back to other places because they can no longer work from home. Do you agree or disagree?
I agree. I think a lot of workplaces, they have a much different view today than they did on kind of a hybrid setup. But I think a lot of employers do want their employees back, at least in partial capacity in the office. So I think it's going to take some getting used to. But if anything, what 2020 taught all of us is a lot of us and us humans were pretty good at adapting. And so, like everything else, we're going to adapt.
Yeah, I don't see a lot of people leaving Austin. I do see that there will be certain roles that cause people to go back to other locations where they thought, originally a couple years ago they were going to get to stay. All right, part two of that on workforce is layoffs. In Austin, Texas, we're seeing some hiring freezes. We're not seeing a lot of layoffs, so I'm calling that frigid. Where do you see some of the bigger companies being? Are they frigid or rigid right now with where they're going in 2023?
I think, like you said, it's with the hiring freezes is more of what we're seeing. But at the end of the day, I think when we look at especially big corporations, you've got plugs or you've got holes in there that right now is the time for corporations to really close up and button up and make sure that they're working at the most efficient rates that they can. There's so much technology coming out that's enabling more and more efficiency from all of us. And so I think that's really what we're going to continue to see is that the employees that are providing the most value and are inherently critical to that company, they're going to continue to see wage increases because of the value that they bring. But I think it's on each and every one of us to really ensure that we are providing the value to the company that pays us.
Agreed, 100%. And for you and I, we're entrepreneurs, so we bring value to our clients every day. And that's a great segue, Mark, to what is going on right now with the sellers market in Austin, Texas. And we ended this year, or we are ending this year, somewhere around 10,000 homes on the market for sale. When we started this year, we were only like a tenth. We were like 1,000 houses for sale. So, do you believe, based on what you're seeing, that the market will be frigid, stay frosty at about 10,000 homes, or will we pull back, or will we see a whole lot more houses come on in early 2023?
So if I had a crystal ball, which I don't, right? Like none of us do, I would say it's going to be really hard to get over that 10,000. We live in a seasonal industry, right? Like we'll always have more inventory come to market March, April, May, June, right? Sellers, for one reason or another, they're moving with kids more often than not. And so most parents don't want to see their child miss school or start at one school and then transfer them. And so that's where we see the most inventory, and it's cyclical every single year. And so I think we're going to see that. But at the same time as we're seeing that, I know so many buyers that are sitting on the sidelines just staring at the market, but at the same time not making any moves. And so I'm foreseeing that rates do continue to come down. And so as that continues to happen, I see more buyers jumping in. And so how much inventory are they going to swallow up? That's really the question.
Oh, I like that. Okay, so let's go with that from an inventory perspective, because seller's market versus buyer's market. And while we have technically shifted to where sellers are offering more opportunity to buyers, our inventory, so from a technical standpoint, we are still considered a seller's market because Austin is at 2.6 months of inventory currently. And so it is still very much a seller's market. However, with the softening and because of rates, even though we have more homes for sale, we are seeing sellers offer more opportunities. So your inventory point is a really good point.
And I think the key is that it's temporary. And, and that's what I keep trying to stress to buyers that are considering buying or selling. Right now, you have an opportunity because so many people are sitting on the sidelines, because it is the holidays, because it is frigid in Texas. There are less eyeballs on every single house. And if somebody needs to move, they have potentially a greater opportunity for them to lock in even better prices and better rates and get some seller contributions today than they could by waiting and continuing to rent.
Yes. And so that, again, a great segue, because I'm actually talking with my sellers about coming out earlier in the new year and not waiting. The closing date is irrelevant. People cannot buy your home if it's not for sale on the market. With that said, you can move that closing date. With that said, the least amount of competition is what you want, because as a seller, it gives you the most leverage over what the buyers are able to purchase. As soon as you start waiting till March, April, any time after that, you have more competition. Therefore, there's a downward pressure for you to compete at a certain level based on what all your other neighbors are bringing their houses out at.
It's such a critical point that you're making. And I think it's in a lot of ways, it's 100% correct, but in a way, it's counterintuitive, right? Like if all of these other people are listing their house, that's what we want to do. Is that seems like the right time for us to list. But more often than not, it's going against the grain and against the norm that helps buyers and sellers win.
Well, it's supply and demand.
Yeah, absolutely.
Yeah. So I would say if you have a rigid mindset that listing your home later in the spring is a better opportunity, talk to your local realtor about what's happening in the market, and in particular in that neighborhood, because all of the segments, this is like hyper local. Talk to your realtor, because that is the key to you as a seller netting the most money in your pocket. So don't be rigid maybe think more about being frigid and being able to move.
I wish that the news and the media would actually pick up on this, right? Like if we look over the last 35 years, it's literally every single year the amount of inventory rises starting in February, but then continuing through June, and then it comes down. And so every year we get these new headlines, especially recently, right? In 2022, oh my God, inventory is skyrocketing. The reality is that is part of a 100+ year cycle, and that just continues to play out each and every year, right? And so a lot of that fear mongering that we're seeing has to do directly with the reality, which is real estate is seasonal, and it looks like we've peaked on inventory for the year. Do we get more next year? In reality, as a mortgage banker, as somebody that works with buyers, I hope so, right? But to your point, as a seller, how many would you rather compete with, more or less people, right? And I choose less every time.
Absolutely. And that is what I'm telling sellers that I'm working with is if their homes are on hold or not in the market at all, they can't be purchased. So now let's talk frigid versus rigid on what those home prices are going to be in the new year. My prediction is that in Austin, Texas, the home prices will not be dropping when those homes that are currently on hold come back on market. And I believe that wholeheartedly, and I'm going to be rigid on that.
So I think Austin specifically is forecasted to be basically dead even. If anything, like the worst case scenario is painted at like -1%, -2% at the very worst, which in reality, based off of these 10+ digit increases that we've all seen and witnessed over the last 3-4 years down there, I think in reality, are we losing value? No, we're not. But it's all, what are we comparing it to, right? And so I think somebody, whether it is with 1 or 2% decreases in home value, even at as low of home appreciation as 2 to 3%, somebody can make a lot of wealth in real estate with all of the different advantages that it presents. And so I think if anybody needs to make a move, it only matters that you need to, and that you lock in something that's affordable for you, and that's something that's actually going to meet your needs for what you're looking for.
Absolutely. In Austin, Texas, our median home price is basically year over year, we're almost flat. We're just like barely off.
And again, we're comparing it to the hottest market that human history has ever seen, right?
Absolutely. And so, okay, that's a great one. So let's talk about foreclosures. And here's my question for you, Mark. In 2022, we're getting all these headlines about foreclosures. Now, that said, there was a moratorium on foreclosures for the pandemic. So, frigid or rigid, do you feel like, or do you believe that in 2023, we're going to see more foreclosures because the moratorium was lifted? Yes or no?
Yes, it has to. That is
Agreed.
part of the real estate industry and how it all works, right? Like it is a healthy factor in what makes up our world. At the same time, there are so many different city initiatives going on both in Austin and Dallas and Houston that are continuing to push for moratoriums on foreclosures, even though we all know we're past COVID, right? Might have to bleep that out, but we'll keep going for now. But at the end of the day, I think there's so much to it, Jennifer. I totally lost track of what I was just saying, but I guess catch me back up.
We're talking about, are you in a rigid belief or a frigid belief that we will have more foreclosures in 2023?
Yes, we have to, right? At the same time, we have to watch all of these initiatives that are going on, because the foreclosures are a healthy aspect of the real estate market. It is a excess of foreclosures and a continuation or a perpetuation of continuing rises. Like you said, we're comparing things to the lowest foreclosure rates in the history of mankind, as opposed to the highest prices, the lowest foreclosure rates. There was a lot of talk about the forbearances that we're literally below 2% now. Of those to forbearance, less than 2% are still in it or facing any sort of modification foreclosure actions still to come. And so we have learned so much over these last 20 years, and especially since this last recession. And so I don't see it getting out of hand, but they will increase.
Well, we have to. And when you look at the numbers, and you know better than I, but when we look at the numbers, the people that we will see that are coming off forbearance and into foreclosure are the same people who would have been in foreclosure if the pandemic had not happened.
You're absolutely right. And in reality, there still is no reason for them to foreclose and to actually go through that process because, like we just talked about, there's very little inventory. And so, even if somebody has to look at the creative financing world and like the investment community, there are so many different ways for a seller that's facing a crisis to be able to walk away from the home and still get paid to do so before even considering taking a loss and facing foreclosure.
Absolutely. So here's the thing. If you are a seller and you are in that space, I implore you, I beg of you, please pick up the phone, talk with myself, talk with Mark, because there are so many things that can be done to avoid foreclosure. Foreclosure is the atomic bomb of credit disruption. And if we can do anything to help you avoid that, that is our goal. I'm not saying you have to sell your home. I'm not saying you need to sell your home. I'm saying have the discussion before it goes too far because there are creative opportunities out there for you. And if we can help you stay in your home, nothing would make me happier.
There's a lot of good investors out there that are doing a lot of really good work, and they like foreclosures and like all the different elements that we talk about. They are critical to the health of our real estate industry. And so, as long as they're approaching the situation ethically, like you said, I think it can very much be a win-win across the board for all of the parties involved, including the bank that doesn't have to foreclose and have that as a write-off.
Yeah, I mean, at the end of the day, the banks don't want to foreclose. They want to keep you in your homes. There's more money for the banks keeping you in your homes than there is any other way. So we will do our best. Just you got to pick up the phone. You got to call us. All right, buyer opportunities. Let's talk frigid versus rigid buyer opportunities. Mark, the rates in 2023 are going to cause buyers to sit back and wait. What do you think?
Frigid. I think we've already seen a normalization and kind of buyers realize like this is the market that we're in. And like we talk about every single week, when somebody's buying and selling real estate, it's because they need to, not because they necessarily want to. Right. And so I think there are so many stereotypes handed down to us that I think in any market, there will be buyers that choose to come to the noise and sit on the sidelines and not jump in. And
Mhm.
so I don't see that changing, right? But at the same time, I've seen a lot of home buyers create wealth already with upwards of the 7% interest rates. And I
Mhm.
think as we continue to see the downward pressure on mortgage rates and they do continue to come down, I think it makes every sense in the world for more buyers than not. They have that need. It doesn't really matter what that rate is as long as they can get their affordability. And so, with the home value increases that we've had, if somebody is looking at selling and then buying, they have all of the opportunity to get themselves an affordable payment. And so I don't see that trend reversing. If anything, I see more competition and more activity, and
Mhm.
that's what I'm foreseeing.
All right. I appreciate that point of view. I really do. Let's talk about the difference between new construction and people buying new construction versus staying in their homes and renovating. Are you frigid or rigid on that?
I've seen a lot of stuff, Jennifer. I've seen a lot of stuff both on buying and the challenges that it presents, both new construction and existing, but
Mhm.
also on the renovation front, right? And so I think to each their own. I think that is the best thing I could say because whichever route you go, just make sure that you're getting the best professionals in your area, the most trusted, the most ethical, because any which way you go, there are challenges to be had. And it's all
Mhm.
about just having the right team around you to ensure your success.
Oh gosh, yes, absolutely. So, for those who are considering renovating, if you are looking for contractors, if you are looking for builders, if you are looking for architects and handymen, etc., do me a favor, give me a shout. I've got a whole list of trusted advisors in that department. And know that from a renovation perspective right now, when you look at what's going on with Home Depot and Lowe's, those guys are slaying right now when it comes time to the renovation business. Because here's a stat that I just learned, Mark. At the beginning of the year, lumber is sold by the per board foot.
Yep.
Our prices were at over $1,400, and now we're closer to $400 per board foot. So for builders, their costs have come way down. For renovators, their costs have come way down, but our cement costs have been jacked up now.
I didn't know that.
Yeah.
I'll have to take a look at it. I'm kind of curious as to why.
Yeah, it seems to have found its place, and who knows what.
You know, you speaking about the cement. I mean, I understand what the lumber, we have been seeing all of the challenges with it, right?
Yep.
From when COVID came and then supplies went out the door and then prices went up to kind of meet demand there. But we've witnessed that it coming down, and we've witnessed a lot of these builders really incentivizing these buyers to take on that inventory before the end of the year.
As we see every single year, builders are looking to get projects off their books because there's a tax incentive to them. So come the new year, will that continue? I believe there's going to be a lot of movement on the place of builders, and they had their heyday and they gouged consumers like nobody's business. So if anyone is looking at new construction, I believe that there's a lot of opportunity that exists when you are working with the right team behind you.
I feel obligated to just bring this up when it comes to new construction. You've got to make sure that this is a long-term purchase for you when you're considering new construction, because as we've seen the evolution of what happened in 2020 and 2021 and some of the gouging like Jennifer brought up, but some of these incentives that are being thrown out nowadays in this different market, we've now have firsthand experience of how quickly and on a dime that can shift. And so if somebody bought new construction over the last couple of years and all of a sudden they have a reason why they need to sell, right now it's really difficult to compete with a brand new construction that's literally in the same neighborhood as you. And so for anybody looking at buying new construction, I would highly recommend look at what phase you're in, look at how many phases are to come, look at what's already been approved, and that's how you want to determine, does that division make sense for you? Because you want to make it be a long-term decision, and you want to make it be the best investment that you can make it.
Right. And so the undertone of that is, if you are looking at new build construction, what Mark is saying is that if there's a 10-year plan to build out acreage and you're in, some of the earlier phases, and you decide you need to sell your home before the next, say, 7 or 10 years, which most of us do. I mean, the average hold is somewhere between 5 and 7 years. If you decide you need to sell your home, you are therefore competing with the newer homes that will also be for sale, and therefore competing with the builder at the same time. So just as an awareness, and what Mark is saying is, it is a really important part of the equation when considering whether or not you are building new construction.
And so to kind of bring back the point as far as renovation is concerned, more often than not, somebody's going to be renovating a home that is in a very much developed and sought after community. That's why they came into the community in the first place. And so renovation can be a really good option, both to make the home what it needs to be for somebody's needs, but then also to get it ready in the next couple of years to sell and to get the most return on investment for it.
I love that. That is a great point of view. Because again, when we look at equity and the amount of equity that we've seen go over the last 2 years, and what the headlines are saying in home prices coming down, our values in Austin, Texas have not gone down. It will take a massive world event and so many other things to impact us in a way that would actually have our homes be worth less than they were 2, 3, 4, 5, etc. years ago. Like, I can't imagine living in that world.
We have so much pent up demand. We have such little historical supply, both on new construction, even though we see a lot more of it today than we saw over the last couple of years. We're still historically really, really low. And we've underbuilt since 2008. And that is not going to change because of this new interest rate environment that we're seeing. And because at the end of the day, The builder is a 100% for-profit business. There's nothing wrong with that, but that is exactly what it is. And so why would a builder oversupply themselves and actually bring down the value of their product, right? So that's what we're seeing in reality, like on the macro scale. And so I don't see it getting out of hand, but at the same time, it's always the only situation, the only circumstances that matter are the ones that you're going through. And so that's where it really takes a village to ensure your success.
Absolutely. And so if you didn't catch that, the underlying point of what Mark said is the builders control how quickly they are building their inventory. Therefore, they mandate a certain amount of demand. And as we've come off this historical time of pandemic and we've come back into sort of a normalized market, what that demand looks like is now a new norm for them to control in order to maintain prices.
It's self-preservation, and they have decades of experience doing it. And we, on the macro scale in America, do not have enough shelter to meet our current needs. We see the homeless epidemics that are happening from coast to coast, right? We're not going to name one city or state in particular, but at the end of the day, we need more units. We need more inventory. We need a continuation of the real estate and NAR and the MBA to continue to push cities to adopt additional, more affordable and more alternative units of inventory that they deem to be eligible, not just for building, but then for financing on our end. And so that's really what we need is we need more inventory.
Yeah, we consistently need more inventory in Austin, Texas. So with that said, for sellers, there's three things. There's price, there's location, and there's condition. It's just that simple. When buyers are coming to look, they're looking at a price point, they're looking at a condition, and then they're looking at a location because it is accessibility to their life. It's just those three things. So Mark, when you think about that for 2023, what do you predict sellers are going to need to compete on the most? Is it going to be on price, on location, or condition?
I think at the end of the day, while it's all three, I think location, 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 right? Like that is what at the end of the day is going to determine price. That is what at the end of the day is going to determine buyer demand. And so I think when somebody has the location, it doesn't really matter the condition. I think it will always be worth more. But I think it's on each and every one of us as homeowners to ensure that we have the best condition that home that we're living in. And that's how we ensure that we have the best condition home that we're bringing to market.
I think you answered that so well. I could not have said it better myself. Seriously, that was a great answer. There you go. Well, you know what? With that said, let's end on a high note. I feel like we've covered a lot, and we are going to end this year next week. We will be right back on our final year end. Maybe we'll come back with some predictions for 2023 and really put a bow on this year, because I know I have a couple of thoughts on talking about buyers, sellers, and investors in Austin, Texas, and putting some predictions out there for not only Austin, Texas, the state of Texas, and then where we're going as an economy. So I look forward to that.
I do too. And if you have a problem or you watching have a problem that needs to be solved, I'd love to help you. So let me know.
Yeah. And if you have any thoughts for us, we would love to hear in the comments, because Mark and I are coming at you every single week. We like to talk not only about Austin, Texas, but we are obviously talking about global economy and how that impacts us all in the greater scheme of things. So with that said, my name is Jennifer S. Goodman. I'm a realtor here in Austin, Texas, and I am with
Mark Krutsky, better known as Loan Officer Mark, signing off. Merry Christmas. Happy New Year.
Happy holidays, everybody.